Hello everyone, welcome to Money Markets with Sadhiq. Remember the video we did last week? We spoke about how both gold and silver had risen sharply, and I had mentioned that it was risky to enter any fresh position and how a pullback was due, right? That pullback is now here. As of this evening, MCX Gold futures are down over 5% and silver futures have slipped nearly 3%, extending a 15% correction from recent highs, right? Let us quickly break down what is causing this sharp fall. Markets have turned risk on with optimism around two expected Fed rate cuts by year end, right? And also another key driver today is the strong US dollar, which gained as investors are expecting a possible resolution of the US government shutdown, which has been going on for more than 20 days now. And also there are signs of improving US-China relations, right? So when the dollar strengthens, dollar-denominated assets like gold and silver become more expensive for foreign currency investors, which reduces global demand, putting pressure on prices, especially when both the metals have been, trading really high. It just acts as a catalyst for traders to cut down on their long positions, right? Trump's calmer comments on China also eased global fears, hinting that all is good with China. Markets now anticipate a fair deal trade understanding between the two countries, adding to the sense of stability. And when investors feel safe, they move money away from safe havens like gold and silver. Silver's fall looks worse because it had rallied nearly 70% this year compared to gold's 50%. And also silver is not backed by central bank buying or large institutional allocation, right? Its demand is more industrial, so it falls harder when global growth expectations soften. Gold, on the other hand, enjoys a solid backdrop. Around 30% of its annual supply is bought by central banks. It has no real substitutes, and central banks don't speculate or trade regularly on their gold holdings. And it is costlier and harder to mine compared to silver, right? Which makes its correction more controlled compared to silver. Technically, both metals were overbought. Momentum was stretched. The RSI indicators were flashing, exhaustion. So a pullback was sort of overdue. For gold in dollar terms, $4,000 remains a key support level. A failure there could push it to $3,800 an ounce. And silver looks weaker. If it breaks below its 50-day moving average, which is at around $45 an ounce, it can slip further to $40 and even lower, right? So stronger dollar, risk-on sentiment, Trump's whole China tone, and technical fatigue has all hit together, triggering this sharp fall, right? Commodity markets are open this evening and volatility could remain high for the next couple of sessions. Stay calm, stay informed, and remember, this video is for educational purposes only and not investment advice. Thank you.